due diligence checklists are needed by entrepreneurs buying a business, so he or she can conduct a careful analysis of the company they are interested in buying. This checklist also helps the seller know what information to provide. Number 1, profit and loss statements. It is suggested the buyer get at least a 3-year history of income and expenses to determine the degree of profitability, and the list of assets and liabilities to see what changes have been made over the period being reviewed. Number 2, review supporting financial reports. This includes account receivables and account payables, depreciation schedules, and related reports. It may also include a review of bank records, tax returns, vendor invoices, and payroll tax filings with owner permission. Number 3, leases. Premises leases and equipment lease agreements should be reviewed so the buyer understands the leasee responsibilities under those agreements. Number 4, an analysis of accounts. An analysis of account concentration will help you verify that the business is not relying on just a few customers. Number 5, permits and licenses. Check that business permits and licenses are valid and up to date. Checking with the issuing agency might be a good idea if there's any question about the authenticity of the documents shown. Number 6, review the list of assets. Investigate all of the equipment, machinery, and other property of the business to make sure it is in working order, and, if needed, properly registered and inspected. Number 7, detective work. It is recommended that a buyer case the neighborhood to learn how many similar companies are located close enough to the business to be considered competitors. Number 8, industry-specific information. Are new environmental regulations about to make the company's equipment obsolete? Industry-specific knowledge is useful in determining if cost of goods and other expenses are in line with those of other companies. Number 9, final inventory. Right before close of escrow, an inventory of all products for resale, as well as parts and supplies, should be conducted to make sure the value equals the amount being paid for these assets. Finally, also of concern is that the seller holds clear title to any and all assets of the business being sold, unless disclosed otherwise. The buyer wants no surprises. If you'd like to learn more, visit BizBen.com, where you will find thousands of California businesses for sale and wanted to buy, as well as resources, blogs, articles, and even more informative videos. Visit BizBen.com today.